The following is an Investor Brand Network audio production via our audio press release solutions. As a multifaceted financial news and publishing company, Investor Brand Network utilizes its network of more than 5,000 distribution partners as well as other corporate communication tools to introduce public and private companies to a wide audience of investors, consumers, journalists, and the general public. Investor Brand Network's platform connects the investment community with companies that have great potential and a strong dedication to building shareholder value. The following audio press release may feature a client partner of Investor Brand Network. Investor Brand Network may have been compensated for the production of this audio production. Please be sure to read our entire disclaimer for full disclosure.
Network Newswire presents From Instagram to High Times, Unpacking the Power of Vast User Networks. In the business world, one of the cardinal reasons for mergers and acquisitions is the potential for synergistic growth. Successful companies usually measure this in terms of revenue streams, market share, and product offerings. However, in the age of digital technology and globalization, a significant facet of growth is potential often found in a company's core customer base and digital reputation. Lucy Scientific Discovery, NASDAQ ticker symbol LSDI, is astutely following this roadmap, utilized by hugely successful corporations by uniquely leveraging user bases to rapidly amplify shareholder value. This well-established, albeit counterintuitive, M&A strategy has been utilized by several major companies, including Meta Platforms Incorporated, or META, Microsoft Corp., or MSFT, Amazon.com Incorporated, or AMZN, and Apple Incorporated, or AAPL, with the unconventional process producing results that vastly exceeded expected typical M&A metrics. Strategic acquisitions prove that harnessing the power of niche user bases can lead to parabolic growth. Lucy Scientific Discovery has recognized the value of uniquely leveraging user bases to rapidly amplify shareholder value. Earlier this year, the company entered into a share purchase agreement to acquire the total IP of High Times. Most recently, Lucy announced the signing of an amalgamation agreement to acquire Blue Sky Wellness, a move that expands its footprint into the growing global wellness category. Headline makers. Meta's strategic acquisition of Instagram in 2012 for $1 billion was less than 1 week after the rollout of its Android app, when it accumulated more than 1 million downloads in a day. Then in 2014, Meta's radar locked onto WhatsApp, boasting more than 200 million users. The acquisition price was steep at $19 billion, but the value wasn't just in the application's functionality. It was in its colossal global user base. Microsoft deployed a similar aggressive acquisition strategy of identifying opportunities to diversify and strengthen position and market share by tapping into vast niche user networks. In 2011, Microsoft's $8.5 billion acquisition of Skype, a platform with more than 660 million global users, became a classic example of how the tech giant was looking beyond just software integration to a global platform integration strategy. Then in 2016, Microsoft made headlines again by acquiring LinkedIn for $26.2 billion. LinkedIn, unlike other social media platforms, was the first mover and dominant in the professional networking space. A golden opportunity. These moves by Meta and Microsoft underscore a clear strategy. Harnessing the power of niche user bases can lead to parabolic growth. Enter Lucy Scientific Discovery, NASDAQ ticker symbol LSDI, a company that has recognized the value of this counterintuitive approach. Lucy's recent share purchase agreement to acquire the total intellectual property of High Times shows that the company truly understands the immense value of a large, loyal audience. In an all-stock transaction, the acquisition provides a stream of high-margin licensing and royalty income from the well-regarded High Times. More importantly, with its massive following, the High Times acquisition offers a golden opportunity for Lucy Scientific Discovery to introduce and distribute its products to a captive, engaged audience, while benefiting from significant early-stage revenue. On closing, Lucy will acquire all the brand rights and fully intends to monetize the broad-based IP through both current and future royalty agreements. Lucy also plans to extend and enhance the existing domestic and international licensing arrangements currently held by High Times, including consumer products and merchandise. The company expects to preserve the core essence of the High Times brands and its followers while simultaneously expanding the follower base and pursuing new avenues of growth and development. Quote, Lucy expects this acquisition to drive high-margin revenue quickly and sustainably, said Richard Nanula, Lucy Scientific Discovery CEO and Executive Chair. This is a great opportunity to grow the market presence of the nearly 50-year-old High Times brand globally through licensing and online distribution. We are confident that this opportunity can add significant value for our shareholders. End quote. Lucy Scientific Discovery's move also appears to be a strategic play to leverage an established niche audience for direct product sales, reputation, and influence. Just like Meta and Microsoft purchase platforms with vast niche user bases to expand their influence, the message is clear. Niche user bases are invaluable as they offer immediate access to engaged consumers, a chance for cross-selling, and opportunities for expansion and diversification. As these cases illustrate, sometimes the most compelling asset isn't a product, patent, or technology. It's the people using them. In the digital age where user engagement is currency, companies that recognize and act upon this fact will often find themselves in an enviable position of growth and influence. Testament to shareholder commitment. High Times isn't the only M&A move that Lucy Discovery has made. In another all-stock deal, the company continued its savvy strategy with the amalgamation agreement to acquire Blue Sky Wellness, a move that quickly expands Lucy's footprint into the growing global wellness category on closing. Blue Sky Wellness built an impressive portfolio of plant-based wellness brands that have generated more than $20 million in each of its last 2 years that complement High Times products and platforms and should positively impact the bottom line of Lucy Scientific Discovery. Quote, the addition of the Blue Sky portfolio and its teams will allow us to capitalize on revenue opportunities, said Nanula. Coupled with our High Times acquisition, this will strategically position us for a substantial near and long-term growth. The recent announcements are a testament to our commitment to expand and grow our business, adding revenue that diversifies our company and should deliver significant value to our Lucy Scientific shareholders. End quote. Blue Sky is led by a team of seasoned CPG executives with experience at Fortune 500 companies, including PepsiCo, SC Johnson, General Mills, and Robert Half. They have built and exited a number of successful companies over the last decade. The acquisition brings a unique suite of marketing capabilities, brand-building prowess, and a highly skilled team with extensive relationships to the Lucy Discovery table. Lucy Scientific Discovery's last few weeks' action of unconventional strategic acquisitions is a clear indication that the company fully recognizes the inherent value of large and loyal user networks. More importantly than just the inherent value of these networks, the company is fast-tracking the integration and expansion of these networks and maximizing revenue streams that will ultimately impact shareholder value. Utilizing part of an unconventional playbook from some major league successful acquisitions, Lucy Scientific Discovery is intent on writing a new chapter of success aimed at benefiting all stakeholders.
This audio press release is an original broadcast provided by Investor Brand Network, a multifaceted financial news and publishing company that delivers a new generation of corporate communication solutions, including news aggregation and syndication, social communication, and brand awareness tools. Investor Brand Network may receive payments for the services and solutions provided to its client partners. You should assume that the owners, officers, and directors of Investor Brand Network or financial analysts mentioned in this audio production may hold a position in and may intend to trade the securities on their own accounts. This audio production is not an offer or recommendation to buy or sell any securities mentioned in this audio production. The information in this broadcast is presented solely for informative purposes and is not intended to be or should it be construed as investment advice. As in all investments, investment in the featured companies carries an investment risk. Listeners should review the companies thoroughly with a registered investment advisor or registered stockbroker. This audio production by Investor Brand Network is not purported to be a complete study of the featured company or other companies mentioned. Information used and statements of fact have been obtained from featured companies and other sources but not verified nor guaranteed by Investor Brand Network as to completeness or accuracy. Such information is subject to change without notice. Please see our full disclaimers and disclosures at investorbrandnetwork.com.